Catherine, the trade right now has become very, I guess, maybe ripe with opportunities in certain parts. Which opportunities do you think are the ones that people should be focusing on the most?
Well, I think there's babies that go out with the bathwater when you have a market meltdown like we've seen in the past couple of weeks. And the two sectors that I primarily like, especially when we look at granularly within the sectors, are financials and biotech. I think innovation is the way to go, especially when you're looking out on a 1 to 5 year horizon. And when you see a yield curve steepening, I think banks are in a good position to benefit from an eventual rebound in the economic activity data.
Catherine, how long does that potential rebound maybe take, given the idea that many of these big banks and even some pharmaceutical companies have cited tariffs as a possible reason there could be headwinds in the coming months and quarters?
Well, the sectors that are most defensive are probably going to be the ones that continue to outperform. My top picks coming into this year are utilities, healthcare, and staples. But I think these are the two sectors that are more cyclical that could likely withstand the headwinds and see nice upside once we get through this uncertainty. Of course, we have the 90-day freeze, but I think the next thing that's going to come into the pipeline, Dom, is soft data moving into the hard data. So we should and will expect a slowdown in economic activity, but not something that the U.S. cannot weather. So I do think that we can see opportunities in these two, primarily these two sectors, biotech and banks.
And Catherine, that brings us to your word of the day. What exactly is it, and why do you think that word is relevant now to investors?
Well, we've all been talking about and discussing the risk of recession. Every one of us, market analysts, puts a probability weighting on it. But I think we haven't seen the hard data come now. So the word is inflection. And what we've seen is soft data, 4 months of consecutive consumer confidence declines, PMIs, survey data, Fed regional banks coming out negative. And now the hard data is going to start rolling in. We see capital goods coming this week. We have durable goods coming this week. The housing market is reporting. So I think what we need to be looking at is the internalization of the markets, that we are potentially going into at least some sort of short-term either contraction or dramatic weakening in the U.S. economy.
Catherine, there's also inflection also has an interesting kind of, I guess, construct around the current environment. I mentioned before that investor sentiment has soured dramatically so over the course of the last several weeks and maybe months now. Is that an inflection point maybe for the markets? They are leading, right? And oftentimes when there's this kind of bearish sentiment, it often signals a possible bottom. What are your thoughts there?
Well, absolutely. And when you look internationally, there's a lot of bearish sentiment going back to the likes that we saw at GFC and COVID. So there's a lot of negative sentiment baked in. The only advice I would add is that it seems that a lot of investors are potentially looking through the hard data, which is going to come rolling in. So a word of caution, but yes, historically, when you do see this level of bearishness, it does come to an inflection point. But timing the market, Dom, as you know, is impossible. So we look for cues to see when is the time to start to accumulate.